So I dollar cost average in for part of my portfolio. And generally when we get these like capitulations, I usually throw a little bit extra in there just to buy the capitulation. I do think you have to be a little bit careful because we don't know the full extent of this contagion yet, right? So I wouldn't say back up the truck. I would say if someone's interested in a very contrarian space, they can layer in.
Macroeconomist and investment strategist Lyn Alden is sticking with the cryptocurrency industry, especially Bitcoin, despite the ongoing bloodbath triggered by the FTX collapse. In a recent interview with Jay Martin of The Jay Martin Show, Alden, the founder of the Lyn Alden investment strategy, discusses the overall macro environment, the current state of the crypto industry, and the possibility of strict regulations for the space due to the FTX collapse. Alden explains that Bitcoin remains a key invention in the crypto space. Unlike other crypto assets that sacrifice some degree of decentralization for speed and functionality, the leading crypto asset has remained pretty much the same for over a decade. She adds that prices might drop a leg lower if the FTX contagion spreads further, but Bitcoin will definitely have other bull cycles that would see prices grow exponentially. The macro guru expresses similar sentiments in a recent tweet, which reads, "Bitcoin is dead right now. It fell 70%. Let's check back in 2 to 3 years during the next rising liquidity cycle and P&I cycle." With this firm belief in Bitcoin, Alden is dollar cost averaging into the leading crypto asset as the world navigates a crucial shift in the overall macro environment. We will now take you to Lyn Alden's interview on Bitcoin, FTX, and crypto regulation. But before we do, please take a little time to hit the like button and subscribe to the channel if you are yet to do so. Also, ensure you drop your comments and observations below and check out our other videos on the cryptocurrency markets. Thanks, enjoy the video.
Overall, I would say it's bittersweet because, I focus almost exclusively on the Bitcoin ecosystem. I'm pretty skeptical of most other cryptos other than stablecoins, which we just talked about. And a lot of those are just casinos. Those exchanges are casinos, and the DeFi protocols are about leveraging and trading tokens that are 99% not going to do well over a 5-year period, if not, actually a higher percentage than that. And so there is this kind of really big sort of parasitic kind of crypto casino industry built on top of what I think is actually an innovation of Bitcoin, right? So Bitcoin is a useful savings technology and a payment technology. You can self-custody it. That's one of the key things. That's one of the key kind of good things about it, is that if you don't want counterparty risk, you don't have to have counterparty risk, right? So what we just saw was basically a tremendous advertisement for counterparty risk. And initial sources I'm seeing are showing that on chain, a lot of small buyers are taking custody of Bitcoin, and there's been a surge in hardware wallet sales, right? So at least some people, I think, are getting the memo. But it is, it's obviously a challenging environment. It's bad for price in the intermediate term, and it probably will slow down, institutional allocations. It'll probably reduce VC capital in the space. I generally think there was already an oversupply of VC capital to the crypto industry. I think a lot of that was malinvestment, and actually the Bitcoin only VC ecosystem is much smaller. And I think that's a much healthier space because it's not about building, it's less about leveraging casinos and things like that. And it's more about payments utility, better wallets, liquidity providers, better infrastructure, that sort of thing. My base case is that I think that the bubble we saw this time in crypto is probably the biggest bubble we'll see. And I keep joking that it's kind of famous last words, 4 years from now, we might get a bigger bubble. But I actually think the combination of the macro environment, right? So the end of like a 40-year cycle of lower interest rates, all the way to zero, all that COVID stimulus, basically, I think, that bubble might be the biggest one. That might be the high watermark for how big the ex Bitcoin, crypto casino part of that industry. I think it'd be pretty hard to rival the size of what it did throughout, say, 2020, 2021. But we'll see. So I think that might be. I think there's gonna be more skepticism among VCs and institutions about what they invest in. I also do think there's a higher chance of regulation now coming. Kind of hidden in the week was that the SEC won a court case against the lesser known altcoin, and basically found that they were a security, that they did an ICO and other aspects of the test for what is a security, and that now strengthens the legal precedent that they could use to go after kind of the vast majority of the crypto space out there. I mean, the SEC chairman has said that most assets that trade on these exchanges are probably unregistered securities, right? So this wouldn't include Bitcoin. It probably would not include things like Litecoin and other of these kind of like, say proof of work coins that didn't have like an ICO. But if a token had an ICO, there's a good chance that it's basically a security, and most of them are not registered as such. Some of them are, and so I do think that there will probably be more regulation against the onshore exchanges, ironically. So this was like an offshore exchange, but I think that it will extend to onshore exchanges, especially because that's what they have more ability to go after.
According to Forbes, U.S. President Joe Biden has joined the throng of people calling for stricter regulatory control in the crypto space following the FTX collapse. During last week's G20 meeting held in Bali, Indonesia, Biden and the leaders of other attending countries discussed the need for international rules to manage the crypto space. Here's a statement from Biden and other G20 leaders. It is critical to build public awareness of risks, to strengthen regulatory outcomes, and to support a level playing field while harnessing the benefits of innovation. We welcome the SB's proposed approach for establishing a comprehensive international framework for the regulation of crypto asset activities based on the principle of same activity, same risk, same regulation. Last month, the Financial Stability Board, an international body that monitors and makes recommendations about the global financial system, proposed a framework for the international regulation of crypto asset activities. According to the global financial body, the framework is focused on promoting consistent and comprehensive regulatory, supervisory, and oversight approaches to the crypto markets and providing high-level recommendations for the regulation of stablecoins on a global scale. If accepted, the SB's proposed framework would subject the cryptocurrency industry to the same rules that govern the centralized traditional financial industry. In her interview, Lyn Alden discusses adequate regulation for the cryptocurrency space and the impact of the FTX collapse on regulation.
So before the blow up, SBF was pushing for regulation, to a very extent. He was kind of positioning himself in DC as one of the say the crypto platforms that was pro-regulation, ironically.
Yeah.
It's kind of almost like using regulation as a tool against, other competing firms. And so I think that version's probably not going to continue, but I do think that there's going to be more regulation. And then there is kind of the, politicians can have embarrassment, right? I mean, if you were a politician on stage with this guy or got donations from him, it basically out of like, potentially out of like customer deposits, it doesn't look good, right? So the optics are really bad around that. He was one of the largest donors in the country, political donors. And so I do think that it could be used as an example. Sometimes kind of court precedents or politicians will use a specific thing as their catalyst to push through legislation. I think that this is one that they're probably going to use.
And if you were to speculate on what kind of regulation would be the answer to this, right? Anything come to mind?
Well, I think it's likely that onshore exchanges are going to have to register with the SEC and potentially also the CFTC, right? Because you have a mix of assets that a handful might be commodities, Bitcoin, maybe Litecoin, and some others, and then you have majority of which are probably securities, and so they probably would have to go through some sort of registration process. Maybe it's a simplified process. I don't really know. I think it depends on how well they do it. I mean, they could, actually Michael Saylor gave a good interview on this recently. He described it as they can go in the direction of progressive regulation or regressive regulation. So regressive would basically saying, these are all unregistered securities. You have to go through the full security process. It kind of wipes out most onshore trading. Or they can do the more progressive approach, say, okay, here's this new policy. This is how you register a token. These are the disclosures you need. And this is how an exchange, registers with both the SEC and, they could have this kind of like clear path of what you're supposed to do. So I think it depends on how much buy-in they can get. I think there is some jurisdictional battling between the CFTC and the SEC on this matter about certain, certain tokens, if they're commodities or securities or not. This also extends over into a spot Bitcoin ETF, even though Bitcoin's not a security. Gensler has, the chairman of the SEC, Gensler has cited a number of times that he's concerned about the exchanges, where the price is determined, and so he basically wants them more regulated before he would allow a spot Bitcoin ETF. And so in general, I think it'll probably focus heavily on these exchanges and the ability, kind of their threshold for what they let on their platform and what the process is.
What are your thoughts on Lyn Alden's interview? Do you have a winning strategy for navigating the turbulent crypto market? Please let us know what you think in the comments section below. Also, ensure you hit the like button, subscribe to the channel, and turn on post notifications so you never miss any of our regular uploads. Thanks for watching.